Yes, we're still in a bull market. And there's a pattern here which is so easy, you might not believe it. Why? Well, it's only two candles. The first one is a failed breakdown or a bottoming pattern. The next one is closing over the previous candle high or an expansion signal. As you can see, this pattern happens quite frequently. Now let's look back to our chart from today. Failed breakdown last week, close over the previous candle high this week. What is that? It's bullish. And if we look here to the monthly chart, it's particularly notable because we closed above that 534. And this is during a week when the bulls had many tests, including two rate cuts. One was hawkish, elections in India and in Mexico. We had a surprise shock for NVIDIA, right? NVIDIA had that news regarding a potential export ban over to the Middle East, including AMD. And we had some antitrust stuff. Man, these bulls really got tested this week, and they flexed. We even had a payroll Friday, which came in with a little bit of a bad number. Not going to lie. People are losing their jobs, but they're getting paid more. We'll come back and talk about that in a moment. So all this bad news, and the bulls were resilient. So yes, we're still in a bull market. And as of right now, according to this pattern, it could be set up for actually more gains. We've talked about this before, but let's go through the news a little bit. So we've had multiple tests this week, including we had the earlier number this week when we had the first cut from the Bank of Canada. Then we had the ECB. Hey, bullish and bullish. This number here I don't like, not going to lie. And then we have the unemployment, which means that this is actually getting closer to that Fed's dual mandate of full employment and price stability. With that in mind, going into the FOMC next week, we have right now no cut baked in for September. We got a 49% chance of a cut and 51% chance of a pause. Into December, we still have a cut baked in. It's either going to be one or two. All right. If we look at the performance for the week, it's not everything going up. It's largely green, but not every sector's up. Energy's down. Financials are down a little bit. But for the most part, the big blocks are flexing and they look pretty bullish. What does that mean? Stick to what's working, because if we're truly going into number 4 and we're only starting the rally, whoa, like look how much higher we go. If this is actually happening, we're only about right here. We've only just broken out and made a higher high. Where can we go? Man, hundreds of percent higher. That's why it's so important that leaders lead, because eventually the followers will follow. All right. And this week, we don't really have a big movement in fear and greed. We're still sitting here at about 45. But next week, we're going to get some tests, just like we had this week. Why? Well, the bulls got to get tested. We're in blue sky territory. And if we're truly going to go higher, we shook off a lot of bad news this week. We have to continue to do the same next week. We're expecting a negative number out of Japan for their GDP. We got a 10-year auction on Tuesday. Then we got CPI coming in pretty much in line here. Headline CPI coming down to 0.2. And these numbers are the same as previously forecasted. So when the Fed meets at 2 and 2:30 on Wednesday, we're going to find out what they're going to do. But right now, it would be a surprise if they cut. I think a pause is perfectly bullish. If we look forward to Thursday, here's where the data gets a little bit better. Why? PPI is coming in at 0.2 versus 0.5. That would be a nice little tick down. But please remember, we have something happening even before that. What is it? It's Apple. Mr. Tim Apple is going to come with WWDC on Monday, June 10th. And we're expecting a lot. Apple Intelligence, its long-awaited push into modern AI in the iPhone, iPad, and Mac. WWDC is going to kick off on Monday. So what are we expecting here? We're expecting AI systems, a partnership with OpenAI. We're expecting AI features like AI involving integrating technology and apps, blah, blah, blah. New capabilities will be opt-in. AI features will be powered on its own technology. After years of discouraging cloud, blah, blah, blah. There's so much stuff they're going to be revealing. This is really important because it feels like Apple is behind the party. So they got to come out and they got to provide that wow factor. That's what I'm really looking for. Looks like there's going to be a lot here, including an iPad, which looks a lot more like a laptop. Microsoft took a couple shots at Apple last week. Let's see what Tim Apple comes back with. Looks like there's a lot of updates, and we'll go through this on Monday when we actually see what they do. But the reason why this really matters is because, as we talked about, next week is really important. We got Apple, we got inflation, we got the Fed decides. And then it really cools off into the second half of the month. We got the presidential election. We've got the end of the quarter. But man, if this is really going to happen, like the market was able to shake off a lot of bad news. Bad news did not make us go down. So what could good news do? Man, it can make us go mega big up. I'm talking like 1995. Just before we go further, if you wouldn't mind, please considering to smash a thumbs up or subscribing to the channel. I would greatly, greatly appreciate that. So all I want to do as we're wrapping up this video is talk about a couple of weekly charts. Why? Well, because the market looks good. But remember, under the surface, things are definitely moving. If you're looking at your portfolio, yeah, not everything is sunshine and rainbows out there. So the S&P right now looks pretty bullish by getting that failed breakdown and closing over the candle high. So that looks good. If we look forward to the NASDAQ, same thing, right? We have a higher high this week. So that looks good. On the dollar, though, this does not look good. Bouncing off the 50 MA. I don't particularly like that. Over here with the VIX, bearish engulfing weekly candle back into 12, which is no longer in the teens. That means there's no volatility expected. However, on the 10-year note, we're actually bouncing off this key area we talked about yesterday. What is it? 4.29. Why does it matter? Because it's our short-term price. It's the 50 MA. It happens to also correspond with this number going back to here at 4.43, which was supposed to be our head and shoulders, knees and toes, where eventually we go down. When bonds go down, stocks usually go up. So we're getting some conflicting signals here, right? We look at the dollar actually closing up on the week by 0.3 with a failed breakdown, bouncing off the 50. The 10-year note bouncing off the 50. Where's the S&P? Well, it's also up. This really tells me that there is U.S. exceptionalism. That's why U.S. stocks are up, U.S. tech is up, the U.S. dollar is up, and the U.S. 10-year note's up. Volatility being down means that, hey, the bulls got tested, but no one feels the need to buy insurance. That's how I am reading it. If we look down a little bit further, hey, not everything was spared. Bitcoin's still up on the week, but it got a pretty big slam today. Same thing with ETH. It's now red on the week. Gold, bearish engulfing weekly candle down by 1.5. That's a pretty big head. Copper, man, 3 red soldiers in a row. That looks yucky, right? We're down by 2 on the week. Oil, also getting a pretty big hit, but off the lows. Here's where it gets a little bit interesting. Let's look at a couple of ETFs. Why? Look at utilities, down by 3.4 on the week. Hey, that's a pretty big slam. But these things are usually inversely correlated to tech stocks. So as utilities go back down, tech stocks usually go back up. And remember, utilities had a massive month. I think it was a 7 or 8% month last week, but we're now back below the previous high. It's a bit of a concern. Other ones which are a bit of a concern, which are interest rate sensitive like utilities, is the Russell. We look here to the Russell on the weekly chart, down by 2.2% with another bearish engulfing weekly candle closing below that low. Oof, right? Yeah, that doesn't look good. If we look at one more chart here, just to get a bit of a sense on where the market's going, XLF actually off the lows. I'm not sure what's going on here. I would have expected this one to be lower, but it's not. Actually, I lied. We're going to look at one more here because if we look at EWW or Brazil, man, look at that pain. Whoa, 11% down. Yep. We've talked about the potential for a crash, and that's exactly what we're ending the week on here. The market's strong, but it needs to continue to be strong. With that said, maybe you want to click on the video on the left, or maybe you want to smash a thumbs up and come subscribe to hang out with me at 9:15 on Monday morning. Thank you for tuning in.